Okay, it's been shaky, it's been wobbly, and 2025 has taught us that nothing in equity market can be taken for granted. Small cap stocks, everyone was going crazy, and they'd become Humpty Dumpty, and reality has hit us. But when you see a shakeout like this, does that shake the foundation of a bull market? This whole theme that move out of build India stocks, move to consume India stocks, is that real? Globally, where do we stack up? And is the worst of the fall behind us? Lots of interlinked questions, and let's really talk about them with Atul Suri, because he's got years and years of experience of reading charts, identifying momentum, talk about portfolio strategy, and of course talk about the holy dippy token kumbh. सब जा रहे हैं वहाँ पे.
Why not?
Why not? Yeah, I miss going.
No, because you have to wait for 144 years, right? Yeah. So that's not going to happen in our lifetime. So this is the only chance. Take it.
Okay. Our viewers cannot wait for 144 minutes also.
None of us.
So let's talk market straight away. It's been a bad year. It's been a bad year. Yeah. Will this bad get ugly before it gets better?
See, it's a very difficult answer whether it will get ugly. But personally, I think that the first question you've got to ask yourself is the primary trend changed? I don't think so. We are still in a larger bull market. Yes, we will go through corrections. We will go through pain. I mean, we know it. We can look back at 50, 100-year charts and see that, hey, no line has gone straight. And in all these times, you know, like I'll tell you, we talk about US, the great bull market between 1980 and 2000. Okay, the Dow moved from some 700 to 10,000. But in that, there was something called crash of 87, where books were written about. But we don't talk about it. 2003 to 2008, in the Indian context, the market had hit lower circuit 2 or 3 times. Yes. So what happens is,
this bull market also, you know, Atul, Ukraine crisis.
Absolutely.
2023, I think markets got into
22 was not a good year.
Yeah.
Actually, when you talk about it, you know, 23, 24, fair enough. Yeah. Half of 24 also was not so good. So it is a 1.5, 2 year bull market, and it has to go through its corrections. Excesses will happen, they will correct, and here itself will you have new leadership setting up. So what I think is that, as I said, I don't know whether the bottom is in place, but clearly for me as a fund manager, the question that comes up is, where is new leadership emerging? What are the new sectors? What are the churns that have to be done? And they will have to be done. And that's the way of the market, yeah.
Okay. So first, the bull market is not over.
Right.
This is a bull market correction.
Absolutely.
Very sharp.
Yes.
Very swift.
Yes.
And before you realize the correction is started, it will get over.
It's absolutely one of those times, you know, when you will get bearish, suddenly the market goes up. Like, dekhte, it's 1,000 points higher in the last few days. And when you will start getting bullish, suddenly you will find that it doesn't this thing. So that is the nature. Yes, we are difficult times. But the thing is that we will come out of it, and we'll come out of it stronger. Because after all this consolidation, what will emerge will be a fresh legs. And these fresh legs hopefully would take us through for another year, 2 years, 3 years. We don't know what it is. But the seeds of the next bull market are sown in the bear market.
You know, we are getting a range of opinions, but there seems to be an extreme consensus in one view.
Sure.
And that's an extreme view that folks avoid small and mid-cap stocks. The fashionable term is mid stocks. Just avoid them. The store of value has moved for many months from large cap, from mid and small cap stocks. Is there merit in thinking like this?
No, I don't think so. I personally think that there's more juice left in mid and small cap. Yes, they have corrected. Yes, maybe it was across the board. You know, it was across the board. Maybe that may not be there. But I don't think the story in small and mid caps is over. Yes, the markets are bad. And we know that when markets correct, we forgot, you know, thanks to the last few months of action, that even though markets were correcting from September, the small and mid cap held out for a few months. We were quite used to seeing Nifty 0.5% down, but mid cap 1% higher. But what we saw in Jan was Nifty 0.5% lower, but mid caps 2% lower, 2.5%. So the catch up that has happened very sharply in the month of Jan. And that pain is being really felt right now. But I do think that as and when markets stabilize and they start looking up, you will find that the reversal will happen. That again, you're already seeing it, I think, yesterday, day before, that small and mid caps are putting in a 1%. I'm not saying that it is an absolute bubble. It is across the board. Selectively, I still feel that small and mid caps, it's not something that you move your portfolio from 0 to 100. You chuck away all your small and mid caps and only have a large cap portfolio. I don't think so. I feel that the catch up that will happen will still be faster in small and mid caps.
If someone is owning small and mid cap stocks, they have exposure to small and mid cap mutual funds also, don't sell them.
I don't think so. It's not a 0-100 game. No, not really. I do feel that as markets stabilize and markets recover, small and mid caps will recover. I still think that the kind of extremes that we have witnessed maybe in 2018 historically or 2008, that kind of ratios that we work on. And again, I'm not saying this based on a hunch. We do some work which is a ratio analysis, and we still don't feel that the ratio readings are as extreme as they've been historically. 2018 was a case in point, or 2008. We still have some more time. If markets stabilize and run up, small and mid caps will also recover at that pace.
So you will not be surprised in the course of 6 months, it could be 12 months, but the small and the mid cap indices can make a new high.
They can.
Okay.
In fact, even the market can. The thing is that the small and mid cap recovery will be also faster.
In 2025, do you see the Nifty making a new high?
I think it is a possibility. I think it's a possibility. Exactly at this point in time, when the index is down 12, 14, 15% and portfolios are down even more, it may seem that like
Kya bol raha hai?
Are you in a dream world, etc. But markets repair, markets take time, and see, the beauty is that in this equity space, when we are getting in the last 2-3 months, we got all bearish. Look at global markets, Nikunj. How far is the US from lifetime highs? Negligible, 1% or 2%. European markets have recovered and again started making breakouts. So what you will notice is that globally, equities are on a very, very firm wicket. They're doing very, very well. Till September, we were a part. In fact, we were the cheerleaders of that party. After September, things have fallen. Things have fallen sharply. And it is propelled by the fact not that domestically things have got bad or domestic selling has started. The FIS selling has been tsunami. You are seeing the highest ever FIS selling in its history. Right? And that is why the market will have to bear the pain. You keep pushing at a wall, pushing at a wall, pushing at a wall, and sometimes the wall does. And I think Jan was the month where people capitulated. But if I look at what is the basis of FIS selling, I look at things like the dollar index. We all look at, see, the US dollar, the DXY was at around 100 in September.
Yeah.
From September to Jan, it went up to almost 110, a 10% move in the dollar index. And if you look at FIS selling, it is absolutely linked to that. The silver lining in all this is, Nikunj, that if you see in the last few weeks, the dollar as well as the US bond yields have started correcting. I, for one, again, fingers crossed, or maybe I'm hopeful, or maybe my position is talking, but I do feel that these are set up for larger corrections. If these corrections play out, automatically you will see that this push, that thud, this tsunami of FIS selling will reduce. Okay. We already see that in the last few days. So I'm saying with a lag of 1 or 2 days, you can actually correlate the movement of currencies and interest rates with the FII flows. I think if FII flows reduce, I do think the market will recover. You cannot withstand such a large FII outflow and not give up something.
IPOs and
yes, and that is another thing that we see that for dollar the domestic inflows are matching FII outflows. But we have so much money that's going into IPOs and QIPs. So that money is not coming into the secondary market. To fuel a secondary bull market, you need that kind of flows. And that had, by virtue of the mathematics, again, the domestic flows, even if you look at the SIP flows or whatever, they have not really come down, which is phenomenal.
So to put it very simply, maal lene ka, darne ka nahi. The time to fear is over. Now it's glass half full rather than glass half empty.
See, I don't know, as I said earlier, I don't know whether the bottom is in place. But agar jo hai, अच्छी चीज है, उसको पकड़ के बैठो.
Too late to sell.
Too late to sell. And honestly, Nikunj, we are not playing a 3-month game. We are not playing a 3-month game. These things are going to keep happening. And it is not, when it has happened, it may have seemed predictable in the past. But September, that valuations were high, India was expensive.
We told you so. That's a favorite line, no? We told you so.
Absolutely.
देखो मैंने बोला था.
अब क्या करना है वो बोलो. The next thing is अब क्या करना है अब वो बोलो यार.
Damage तो हो गया.
कि यहाँ पे बेच दो. यहाँ पे बेच दो. अगर pull back आएगा तो जो आप बेचोगे उसमें सबसे ज़्यादा pull back आएगा.
Okay, so let's first just I'll put the template. That is Atul Suri's template.
Sure.
You get the credit if you get it right. Atul Suri's template is, it's too late to sell. The bull market is not over. the panic and the excesses in the market, I think the time to panic is over and the excesses in the market have normalized.
Sure.
Small and mid-cap stocks, not everything will go up, but the party is not over. Okay. Now there's one number which everybody is now suddenly started tracking.
Right.
Dollar index.
Right.
The fascination with dollar index.
Yeah.
Every morning we come and say the dollar index super hai, markets will go down. Is it as simple as one data point which will decide which way flows would move? Dollar goes up, FI sell. Dollars come down, FI will come back. It cannot be that simple, right?
It cannot be. Obviously, it's not that simple. See, there's a lot into going it also. You got to ask yourself, why is the dollar going up? Why have
dollar upar hai, chalo market
it's not. It's not like you run a computer system, that you create an inverse relationship between the dollar and Nifty and you trade that. S&E, it's not as that simple. But I guess it gives you a larger thing. It doesn't match day to day. But even if you look at the US, if you look at US, there's so much happening. I mean, like now Trump saying, I want to take over Gaza. He came, I mean, pre-election. So what happened was, if you look at even the dollar bottoming out or bond yields going up, it's very linked to the Trump election. And all his, saber rattling which was there. But actually you look at implementation, kuch nahi hai. I mean, Mexico, Canada, he bad-mouthed them to
India
hell.
तो है ही नहीं.
हाँ, India तो अच्छी बात है, अभी तक तो नहीं है. So the fact is that, he said like, as if on day one he's going to come and put like tariffs. He put tariffs, but a phone call or two was good enough for him to reverse. So if you look at it, he's very smart, a businessman.
He's a businessman first politician.
It's all about the deal. It's all about saber rattling. And that man also looks at S&P 500 every day. Yeah. He's very, very sensitive to markets. So I feel that the market also has realized. That is why if you see why the dollar or why bond yields will go down, there was a fear that all his moves were very inflationary. Yeah. All these things will lead to inflation. That is why all things preemptively went up. The dollar went up, bond yields went up. Now when people are seeing implementation, they are saying, hey boss, this guy's talking, he's not implementing. And that is why those excessive, a 10% move in the dollar in 3 to 4 months is a lot globally. I feel that those excesses will come. I'm not saying it will go back to 100, but yaar, ye jo tsunami of FI outflows ho raha hai, wo thoda...
Jim O'Neill came on one of our shows and I said, what do you think Donald Trump will do? His reaction was, do you think Donald Trump knows what he will do? He says, so don't judge the financial market with what he's saying. Go by what he is doing. And that is what I think is important.
And he's got a system, he's got a team, he cannot just implement, he just can't go and take over Gaza. It's like mind-boggling logistics. He has a team, it has to be implemented, and at that stage, things are very different from what he's saying.
Okay. So, template 1, we've understood the market setup. Template 2, the global setup. I have a follow-up question, which is that right now we're feeling great about equities.
Right.
If the dollar comes down, US markets will also come down because dollar index has gone up and US markets have gone up. It's not going to happen in isolation.
Right.
So in a scenario, when the dollar comes down, which is good for us, and US equities come down, for correction, they've also bloated right now with all standard.
Who knows?
Let's say dollar comes down and US equities, they come down. Okay. What happens to India? Will we outperform in this fall because we've not so will India do well when US markets fall?
See, I don't think that it will be that simplistic, Nikunj. Okay. See, what I feel is that, we see that FI is selling in India. It's not just India. It's actually EMs as a space. 3 months ago, China was the ultimate trade in town. Do you remember how the things it had circuit up and everyone wanted to invest in a China fund.
You remember just around Diwali, Diwali
everyone wanted to invest in a China fund and they thought that, boss, FIs are selling because China is missing. And in the end, you realize that what a big...
I remember somebody came and said...
It was a horrible trade. You look at Chinese markets after that. After that gap up, whoever incrementally went and bought, Chinese markets are lower. In fact, China is seeing net outflows. So what I'm saying is that this outflow is not India specific. It's not that they don't see the big story. The fact is that there are now a lot of macro traders who are trading across asset classes. If they have a position in currency, it's linked to equity. If it's linked to equity, it's linked to EMs. If it's linked to EM, India is a part of that basket. So this is really happening globally in EMs. And as I think that once interest rates and dollar cool off, that pressure on EMs, and India obviously has been it's that tall poppy culture, which was the tallest poppy in the EMs. It was India. Where were they making money across the board? It was India.
Tall poppy culture.
Tall poppy culture.
So for our viewers, there are two things to look at, and I'm simplifying it for them.
Sure.
If the dollar index goes down, and US 10-year paper, just every morning look at US 10-year paper. It was closer to 5, it is now closer to 4.5. If dollar index goes down, and if 10-year paper comes down, that is good news for India. and nothing beyond that. Just monitor that, and Atul feels that those markers are moving towards India. Now let's talk about India. You are a trend follower. You always say trend is my friend.
Right.
Baha Bhagwan che.
Right, absolutely.
So let's start looking at the pockets. A year ago, everything was going up in the PSU space.
Right.
Now the average fall in PSUs
Right.
is 25 to 40%.
Absolutely.
For a trend follower who still believes the long-term bull market is on, is the PSU party over? The Cinderellas of the world, they need to run now? Or PSUs will come back and make a new high? Whether they make it this year, next year, we don't know. But can they make new highs?
I think the PSU space is in a bit of pain. I can definitely tell you that. There are 2 or 3 stocks, I mean I have one, I won't name it, but who have actually held out very well.
I will not stop you from naming.
That's okay. So the fact is that, there
You
are...
only own one PSU stock?
I only own one PSU stock.
Achha, I thought you had a few more.
I had a few more, but then again, as the trend changes, you exit. You have to recycle and you have to change, because what happens is, the interesting observation is also that the length of trends has become shorter.
Okay.
The markets have become faster. Nikunj, at the time we started, when stocks had trends in place, they would last 3 to 5 years.
So true.
If you see Bajaj Finances, the Eicher Motors, the
10
Page
saal ka
Industries,
trend.
5 saal ka trend, all those terms were there, and a lot of the funds did well who were in that mode. But you will notice that in the last, I would say, year or two, especially post-COVID, the speed of trends has become so much faster.
Yeah. Churn is higher.
Action
is higher.
Earlier,
information is higher.
In fact, there has been a paradigm shift in the fund management industry. Earlier, churn was a very big factor, and people always wanted low churn. But today, you'll realize that performance is highest among the high churn funds. And suddenly, the sensitivity or the importance of low churn is actually reducing, and people are very, very agnostic to your churn. They said, yeah, forget your churn, you give me your returns.
Because dynamism is changing.
Yes,
Everything
the speed, it's a very, very big thing.
Yeah. So PSUs, but PSUs.
PSUs. So PSUs really were something that, which had a beautiful 2.5 year run. I feel that a lot of them have been structurally hurt. They are going to take a lot of time. Let's say railway stocks for that matter.
Railway, defense, shipping.
Yeah, exactly. In defense, 1 or 2 stocks still holding out. That's what I meant. I have one of them. But you'll realize that in the energy space, in the railway space, these stocks have fallen 30-40%.
When you say energy, power.
Power-related plays that
PFC,
are there.
REC types.
All those kind of plays that are there. I feel that they will take time.
So if somebody is owning PSU stock, just take a hit and get out.
If you've bought at the top, yes, you will have better opportunity somewhere else. That's all I'm saying. If you sit through it, but you'll have to sit through a lot of pain and underperformance.
Okay.
Now the thing is that if you bought it earlier, you're in the money, if you can still take something off the table, what I feel that the pullback that is coming, as I said, that market's correct. In the churn, you will always find new sectors and themes emerging, which is something which we can cover later. What I am spotting, how the fall is happening, what is showing strength. Even in this market, there are stocks touching 52 weeks.
So let's talk about them.
So you'll find that sectors, the large sector, where I feel that which has held out very well is tech.
Okay.
Tech is very dependent.
Traditional good old IT.
Good old IT. And you'll find that tech is obviously very dependent on the US because that is the final customer. And you'll realize that a lot of these tech stocks have actually held the fall as a large sector. Tech is important because after banking, it's the highest weightage. So if you ask me as a big sectorial space, I think tech has held out very well.
4-5 naam jo hai. TCS, Infosys, Wipro. Same. Okay.
Then another sector which I feel is emerging very well is autos.
Okay.
And more so after the budget, that people feel that consumption will come up, especially in the two-wheeler space. I find some of the auto stocks came out with good numbers. And some of these auto as a sector has also kind of held on very well. That's another theme which...
Two-wheelers, four-wheelers, EVs, lots of them.
Absolutely.
What do you like within autos?
I prefer the two-wheelers. I like
all three?
I have some in my portfolio. The third space that I find very interesting is pharma and healthcare.
Okay.
Again, another theme, pharma to some extent is again export dependent, but I find that some of the pharma stocks have held on very well. They've all hurt, but the fact is what has hurt less, and in the last few days what has started emerging, where the numbers are coming out good. When the new bull market or when a fresh trend comes, where the numbers have been good, which have reported good numbers, which have shown less downside risk, which are breaking out fast, tend to be leaders.
So I'm getting a sense that it is IT, pharma or auto, ये defensives हैं. I mean, that means if markets are saying that go for defensives, go for companies which are less volatile, companies which have no debt, high cash, give a lot of dividend. That means markets are moving into a defensive mode.
Also, I feel that, Nikunj, these were under-owned. Like, we're talking about capital goods. Am I bearish? I'm not. I still think that it's a great theme. After a few months of pain, it will emerge. That is the core Indian theme. That is the mega theme that is playing out. But the fact is that a portfolio which has gone to 70-30 between industrials and consumption, post the correction and post the budget, what will happen is that these portfolios are getting realigned.
All right, so that's where we were trying to understand the markets with none other than Mr. Atul Suri. But